The tech sector is one of the most exciting and fast-growing parts of the market, but with so many options, how do you know which ones to pick? If you're a UK or European investor, you might have noticed that popular US tech ETFs like VGT or FTEC aren't available. On top of that, terms like accumulating versus distributing ETFs, physical versus synthetic ETFs, and expense ratio can make things even more confusing. In this video, I'll break it all down and reveal the top tech ETFs to buy in 2025 based on performance, net assets, expense ratio, and overall quality. By the way, I'll only focus on pure tech ETFs, so it won't include ETFs like QQQ as it's not purely tech. I'll make a separate video for that. And stick around until the end because I'll be revealing a bonus pick as well as my top pick and one which I personally own in my portfolio. Let's get started. Before we jump into the ETFs, let's talk about why these criteria matter. The first is net assets. A large net asset or asset base means that the ETF is more liquid, so you can easily buy or sell them without major price fluctuations. It's also a sign of strong investor confidence. I've selected ETFs with net assets over £600 million, ensuring sufficient liquidity and stability. The second is expense ratio. A lower expense ratio helps you keep more of your returns. I've picked ETFs with an expense ratio of 0.5% or lower because high fees can eat into your profits over time. The third is Morningstar rating. A 3-star or higher rating indicates strong performance and solid management over time. Next, I've selected ETFs that are listed on the London Stock Exchange, which eliminates currency conversion fees for UK investors. And finally, I looked at the replication method. My preference is physical replication. This means that the ETF directly holds the stocks in the index rather than using derivatives, ensuring more accurate tracking. All the ETFs in this list are accumulating ETFs, meaning dividends are automatically reinvested. This makes them ideal for long-term investors who want to benefit from compounding growth. ETFs that pay out dividends, also known as distributing ETFs, are just as good for investors who prefer receiving monthly dividends. Alright, now let's dive into the top tech ETFs that meet all of these criteria. In the fourth position is the VANEC Semiconductor ETF, ticker symbol SMGB. This ETF specifically focuses on semiconductor companies which are crucial to the future of AI, computing, and electronics. It has net assets of £1.8 billion. Its expense ratio is 0.35% with an annualized performance since 2021 of 26.8%. It also has a 3-star rating by Morningstar. With the semiconductor industry booming, this ETF provides targeted exposure to leading chip makers like Nvidia, AMD, and TSMC. If you believe in the future of AI and cloud computing, this could be a great addition to your portfolio. In the number 3 position, we have Invesco Artificial Intelligence and Big Data ETF, ticker symbol XAIX. This fund focuses on companies leading the AI and big data revolution. AI is one of the fastest growing areas in technology, and this ETF provides direct exposure to this sector. It holds stocks of companies heavily invested in AI, machine learning, and cloud computing. It has net assets of £3.4 billion, expense ratio of 0.35%, and a 5-year annualized performance of 26.19%. With its 5-star Morningstar rating and solid risk-adjusted returns, is a strong contender for long-term investors looking to capitalize on AI's explosive growth. In number 2 position is XAIX's MSCI World Information Technology ETF, ticker symbol XXTW or XDWT for the rest of Europe. This ETF offers exposure to tech stocks globally, not just in the US, making it great for diversification. Its expense ratio is 0.25% with a strong 5-year performance and top-tier 5-star Morningstar rating. This ETF is a great pick for investors who want a mix of US and global tech stocks. Finally, my number 1 pick is the iShares SP500 Information Technology Sector ETF, ticker symbol IITU. This ETF provides exposure to the biggest tech companies in the US, including giants like Apple, Microsoft, and Nvidia. It has an expense ratio of 0.15% and it has returned on average 28.3% annually over the last 5 years. Morningstar has awarded it a top-tier 5-star rating. This ETF has delivered outstanding returns, significantly outperforming the broader market. Its high beta indicates that it's slightly more volatile, but that also means greater growth potential during bull markets. Before we wrap up, I want to give a special mention to First Trust Nasdaq Cybersecurity ETF, ticker symbol FCBR. This ETF focuses on the cybersecurity industry, a sector that is becoming increasingly important as digital threats grow. However, it does have a high expense ratio of 0.6%, which is on the pricier side for an ETF. While this may not make it the best choice for cost-conscious investors, it could be a great pick for anyone wanting direct exposure to cybersecurity, an industry with tremendous growth potential. So there you have it, my top tech ETFs to buy in 2025. These ETFs not only meet the criteria for strong performance, low fees, and high assets, but also offer a solid opportunity for long-term growth in the tech sector. Whether you're looking for exposure to US tech giants, global tech, AI, semiconductors, or cybersecurity, these ETFs provide plenty of options. I personally own IITU in both my SIP and ISA accounts. If you want to see my other positions, click this link here. And remember, you always have to do your own research before investing and ensure that these funds align with your personal financial goals and risk tolerance. If you found this video helpful, don't forget to like, comment, and subscribe. I've got plenty more investing content coming your way, so stay tuned.